Hello, I'm Darius McDermott from Cal, and today I'm joined by John Chatfeild-Roberts and David Lewis, who are the co-heads of strategies of the elite-rated Jupiter Merlin portfolios. Gentlemen, good afternoon. Thank you very much for coming and talking to us.
Good afternoon, Darius.
Afternoon, Darius.
Nice to see you.
So let's start with, if I may, a bit of how you get to your investments. Let's talk a little bit about your investment process. I know that you begin with sort of an overview of the macroeconomic environment. What is your view of that macroeconomic environment today, and which asset classes is that leading to you to reflect those views?
Yeah, well, ever since in November of last year, we believed that we were in the early innings of a new economic cycle, and we still believe that that is the case. So in November of last year, we moved our portfolios to take a reasonably significant amount more equity risk, seeing equities as the best place to be invested if you are early in the new economic cycle. And indeed introduce some more cyclical orientated managers into our portfolios, where we thought would benefit in the cyclical rebound that we saw the economy going through. Where we're sitting today, I would have said we're obviously that the cycle has moved on 1 year from November of last year.
Yeah.
And it's aging in some ways. With certainly there are some more concerns of how sustainable it's going to be, but we still have the opinion that economic growth will remain strong, and so we think that equities continue to be our favourite asset class.
So I know you, with your vast experience and research, you know how you expect managers to perform in certain economic environments. But tell me, if you would, a little bit about the mixture of growth and value managers you have today, say, for instance, in the balanced portfolio, and why you have that mixture of growth and value managers.
Okay, well, that's an interesting question, Darius. I mean, obviously, I say obviously, but growth managers, we think, are people who are looking forward for companies that can repeatably grow over time, whereas value managers are those who are trying to pick up, something that's worth £1 for a 50p. So that's the difference in our style. But the way we think about it is that nothing is ever totally baked in. Nobody's ever quite sure. It's very easy in hindsight to say, well, it was perfectly obvious that was happening. So we like to have something, perhaps a foot in each camp. And, as David said, going back to the vaccine announcement, that was when value type companies really had a bounce. And we made sure that we had enough exposure to them to catch on to that. But we also know that some of the best companies are relatively more expensive and grow consistently over time. And we very definitely want to have good exposure to those sorts of companies.
So you've said in the past, finding these managers is an art, not a science, and there is no substitute for looking in the whites of somebody's eyes. How has that fared over sort of virtual video calls being much more standard than you would have done before, where managers would have come into your offices or you would have gone into their offices? How have you found that transition?
I think it's a really perceptive question, Darius, and and I would say it has been a challenging thing for us to cope with. We very much build our process around the value we get from discussing managers' portfolios, their views, their positioning, their outlook on a regular basis, and we were able to carry on that reasonably consistently throughout the move, I suppose, to digital and digital communication. The more difficult thing was to try to get comfort on new managers when you haven't met them before. You've not got a relationship. You've not got that history of discussions. That was a more challenging thing for us to get over the line on. We did do in one particular case, we got one new fund that we hadn't met them in person. We had met the different members of their team historically and invested in other funds in their range before. But it is challenging when you think that actually, when you take the view that the managers and their skill sets are really, really integral to their ability to create value over time. Not being able to be physically in the room with them was a challenge for us.
Yeah, I totally go along with that. I mean, it was very much the exception, Darius, that we bought this fund without actually having physically met the manager. It feels wrong to put your trust in people that you actually have not been in the same room with. And yeah, I mean, I think that's the exception that proves the rule, really.
Well, I think then we're 100% unanimous in that, because I've found exactly the same thing. Managers you know well, yeah, it is easier to jump on a video conference call, but managers you've not met before, I think that the whole challenge process and everything else is a bit more difficult over a video call. So look, we touched on the increasing inequities into that sort of risk-on environment. Tell us a bit about some of the changes you've made to your portfolios in maybe the last 6 months or so.
Well, I mean, if I may say, David, we tend not to change our portfolios that often. What we're trying to do is to buy the best managers we can find wherever we find them, and then stick with them. And obviously, we don't get it right every single time, but we try our very best to make sure that's normally the case. I suppose in the last 6 months, probably the biggest thing we've done is we've radically reduced our exposure to emerging markets generally and to China in particular. I mean, the way we look at it is that companies will almost certainly make money selling into China over the next few years. But there is a problem with actually investing in Chinese companies. We're not convinced that shareholders come top of the pile in companies that are Chinese. And given that what we're trying to do is we're trying to make as much money as we possibly can for our investors within a risk profile, there is that. And secondly, there is an ESG angle. People talk a lot more about environmental, sustainable governance these days. And if you look at the Chinese universe, perhaps there are more ESG questions out there than we can answer.
And maybe a final, last, gentle question. What has been your most successful holding in 2021, please?
Yes, well, I was very happy to chat about that. So the best performing fund that we've held in our portfolios is a fund called the Blue Box Global Technology Fund. So it is a fund that we introduced into our portfolios in November of last year. And it was our first dedicated technology equity position that we've had for a number of years in the funds. We had been looking to invest in a dedicated tech fund for some time. We hadn't quite found the right strategy for our portfolios. We came across the Blue Box Fund, and we were very pleased to got invested in that. It's versus other peers. It's I suppose I'd class it as it's trying to invest in those companies that help other companies with the digital transformation. So they're very much I suppose we would class them as the picks and shovels. They make a reference to the gold rush of the technology revolution, really. So they're not investing in those necessarily disruptive companies, but those companies that are going to facilitate the technology transition. And they've also got a significant tilt towards sort of more hardware side, so a number of chip manufacturers and the like. It's managed by a chap called William DeGale, who we really like. He's an accountant by background, and whereas a number of managers in the tech space are very they're tech enthusiasts and then fund managers second. This chap is an accountant first, before being a tech enthusiast. So we think that it keeps his feet on the ground. He takes valuation very focused in his approach, which means I think it does keep him out of trouble in some of these very highly rated areas of the technology space. So we think it's a really good growth theme that we want exposure to. We think the technology revolution is going to carry on for many years to come, and so we're very pleased to have that position within our portfolios.
John, David, thank you very much for bringing us up to date on the Jupiter Merlin range of fund of funds. If you would like any more information on the elite rated Jupiter Merlin range, please do visit fundcalibre.com.